The IGV software ETF is down 13% in a week. Some of its components, including Unity, AppLovin, and Circle, have lost more than a quarter of their value in just 5 sessions. So when does this selling lead to a buying opportunity? Joining us now are Steve Sosnick from Interactive Brokers. He is looking at how retail investors are playing the space. And Sonali Basak from iCapital is here to tell us whether opportunities are starting to emerge. So Sonali, part of this is, hey, we wanted a broader market. We wanted a rotation away from growth into value and cyclicals. This, though, seems more than that. Obviously, there's panic about disruption. Does it rise to the level of where you should start to believe that it's time to be a contrarian?
You know, it's interesting that you asked that. We are starting to get calls from clients looking for notes that are tied to this trade, certainly looking at everything kind of being thrown out with the bathwater here. You even look at the underlying components of the ETFs themselves, and you can see, well, wait a minute, not everything in these buckets are going to be impacted by AI in the same way. And by the way, if you look at the ETFs, actually there's Bitcoin miners in there too. Right. So throw crypto into all of that. So certainly people are looking to pick at the trade. I would say that there's a lot that's been sold out, including in private markets, tied to the trade. And there are software players, particularly the incumbents, that will win at the end that are worth looking at soon, if not now.
I actually think that it's an interesting feedback loop that's going on. You mentioned the private capital, because part of it is software used to feel like it had a valuation floor because they were candidates to be taken private. And now you have private capital that's overexposed to software that is in no position to be doing any buying.
But it's interesting. We have been talking to loads of managers in the last couple of months, actually. So this is not a new problem. It's not something that people didn't see coming. You might have seen the reports about Apollo, for example, recently pulling back exposure to the space. But equally, we have a lot of managers that have invested in the space trying to pick the winners in software that would win off of AI. You look at some of the biggest privately held firms, Databricks, right, is perhaps the greatest example of this. There are going to be winners in the end.
See, the retail investor has been trained and has gone in and bought the dips consistently. Are they doing the same here for software, for these individual plays that Sonali was mentioning?
You're right, Melissa. It's almost Pavlovian. There's a dip, it has to be bought. We're not actually seeing them race into software stocks.
Okay.
One big exception, Microsoft, if you still want to consider a software stock, we had buying in that name that I've really never seen before on that big 10% drawdown, and then it continued as the stock continued to have further drawdowns. We saw continued buying. Oracle, to the extent you see that as a software stock, we saw that. But we're not seeing them really come in for like CRM and some of these other names. You know, to me, this is sort of the flip side of the AI trade, right? Because everybody was so excited about how AI was going to advance the bottom lines of software companies and really help them out. But then all of a sudden it was like, wait a minute, if they're disruptors, who are they disrupting? Oh, wait, this is the group that's getting disrupted. And I do think that we're not seeing our customers fly back into that because of that reason. So there is always reflexive dip buying, but not in these names to that extent.
Is this specific to software that retail's not going in and buying the dip? Or are you seeing in other trades that have been flushed as well, like silver comes to mind? I mean, are they sort of hanging back and not doing the buy the dip right now? They
bought plenty of silver on that dip. And so Silver and Microsoft actually moved past Tesla and NVIDIA to be one of the most active stocks in our platform, SLV. They also bought AGQ, which is the triple levered silver, because if a 35% fall in silver is not enough for you, why not buy something that fell 70%? So we are seeing that kind of activity. They haven't gone away from dip buying, but they just software hasn't captivated them in the same way.